Appreciate it. It's the time of year when we develop and bring forward the audited financial statements for fiscal year 2015. As you know, the fiscal year ended on September 30th, 2015. So what happens is a lot of work goes on downstairs with the finance staff and the rest of the departments gathering up what we affectionately call year end. We retain a firm who's been with us quite a long time, Presnell Gage Public Accountants. Nick Nicholson is here to present the audit. As part of the audit, we have, as you know, for the past 12 years, received an award for excellence in financial reporting from the Government Financial Officers Association, and for our comprehensive annual financial review, and as the mayor said, affectionately known as the CAFR. That document has to be submitted by the end of this week. We rushed the audit a little bit to get it to you. That's why you don't have a signed copy. We had some extraordinary circumstances. The document is complete except for the signed letter. We will get that done. The reason that we're pretty adamant about submitting the CAFR again is that it is a great document for use in our financial dealings. When we got our pretty excellent bond rating for our sewer bonds was in part because of the financial reporting and the quality of work that's done that goes into the CAFR document. So we wanted to get that done once again. We've been a little bit complicated this year. As you know, Don Palmer, a longtime finance director, left us in January. So the staff downstairs has done an excellent job. Sarah Banks, our accounting manager, is here tonight to provide support and mostly shoring me up as interim finance director while we do this. Nick will be giving the presentation today, but I just wanted to thank the finance staff and everyone for all the work they put into this. And with that, I'd turn it over to Nick. Okay. Thanks, Nick.
Well, thank you for having me. Like you said, my name is Nick Nicholson. I've been with Presnell Gage for 11 years now. So, and I am the manager on this audit. Unfortunately, Mitch Marks, who's the partner on the audit, he was unable to make it due to some family circumstances. But so you just get me today. So I guess we'll just kind of dive right in and just go through. My intent here is not to go through the document in just a deep detail. We'll give you some summary and some overall analysis of it so that we don't get buried here till midnight. So that is our intent. As Gary mentioned, basically the entire document is a CAFR, a Comprehensive Annual Financial Report, and basically that, as he mentioned, the GFOA, the Government Finance Office, they have a set amount of standards that they require to be in that document, which is beyond just your generally accepted financial statements. And usually that includes some statistical sections and some other extensive data that you have to include with it. So that's why the document is as long as it is in comparison to probably other governmental offices that you've seen. The Governmental Accounting Standards Board is actually the governing body that oversees all of the governmental audits, and basically that's the generally accepted accounting principles that this audit falls under. The only item that has changed from prior years to this year is something I would imagine you've heard about, but GASB Statement Number 68 was implemented this year, and that deals with public retirement systems. Is where it comes into play. Basically, the new standard, in the simplest terms, said you have a portion of the pool that PERSI has. Basically, they have the assets and the amount is going to be paid out of them. You have a share of that because you participate in it, and GASB says we want you to show that share on your financial statements. And that share is come about in a very complex manner, but in simplest terms, they have an audit. The PERSI does, comes up with a number that says this is the net unfunded liability, and here is your percent of that net unfunded liability, and we allocate that to you. So that is in basic terms as we can come up with the new statement. And so how that is implemented is you basically go back and you restate day one of the year, and then you allocate that year's activities. So at the beginning of this year, we did a restatement of beginning balance of net position. That liability change at the beginning of the year adjusted your net position by about $4.8 million. So it is not an insignificant number. So I wanted to highlight that before we moved on. So that number, what it represents is between a 90 and 95% funded rate for the state of Idaho. Basically, they have assets that are 90 to 95% of what their expected life expectancy of expenditures out of that PERSI fund is. In terms of comparison that to other states, that is a very, I guess, preferable place. For instance, about a year ago, the state of California was running around more 50%, and there were several other states in the 50 to 60% range. So a 90 to 95% is in a much better position than most states in the United States, which is good for the state of Idaho. And so that number, if we were sitting in another state, could be much larger than a $4.8 million restatement. So with that being said, as we go into it, basically in an audit, there's two parties. There's you guys, and basically governed by management, and then there's us. Your responsibility in this CAFR, or the management's responsibility, is the financial statement preparation. The notes, the numbers, all of that is your information, and it really shouldn't be any different from the information you're seeing on a basis as you see every meeting. So we don't make many adjustments to it, and basically our responsibility is then to look at that information, test it, and put an opinion on it. So what is our opinion? Since that's the most important part to us, we have two opinions that we put on. One has to do with the financial reporting, and one has to do with internal controls. Our first opinion is an unmodified opinion, which is the highest level that we can give, basically saying we did not come across anything that would make us believe that these financial statements aren't prepared according to standards and are basically what they look to be. And the same goes on the internal control side. We did not note any instances of internal control processes that weren't operating properly and would lead us to believe that the information could become materially misstated because of a lack of operation of those internal controls. So with that being said, going into kind of, this is just a general outlay of the statements themselves. I won't go into detail. Those are basically, it follows kind of a set pattern there. In the audited financial statements, it kind of tries to highlight, standards have tried to highlight basically the main portions of any government agency, which is called your major governmental funds. Basically the biggest or the most common or some other criteria that says, hey, these are the biggest areas that we need to focus on, and those are your major governmental funds, which are the general, streets, parks and rec, capital projects, and Hamilton. And then you can see all the other non-major, which are basically allowed to be summarized. The other major funds are your enterprise funds, your water, sewer, and sanitation. Those are required to be highlighted. So, the general fund, obviously, it's a fund that accounts for all financial resources except those required to be accounted somewhere else. Basically, it's the catch-all, and it's your chief operating fund. So the largest portion of your expenditures come out of the general fund. Special revenue funds, basically, usually they come about because the source of revenue that is funding that, it specifically restricts the expenditures in that fund, and so they're required to be presented separately. One of the major numbers that we always like to highlight and is of probably the most importance to you is the fund balance of your general fund and your other major funds at year end. Basically, this is the amount that at the end of the period, this is what you had available to function for the next year. You can see that your general fund has continued to increase its fund balance. Generally, that happens as your expenditures and the size increases because you need to have some operational funds to continue into the next year. For reference, we usually, in most governmental places, we try to say, hey, you need to, a good practice is to have about half a year's expenditures in operating funds to carry over, and you guys were right about at that. That's our recommended minimum is between 3 to 6 months, and I think you're right at 6 months. So that's a good thing. The enterprise funds, which are obviously water, sewer, garbage, they do have a different accounting treatment than your regular governmental funds, which the governmental funds operate on kind of a modified accrual, which basically is non-business-like. It's budgetary basis. So you guys work on budgets. It's cash in, cash out primarily. The governmental funds operate on that form. The water, sewer, sanitation operates on basically a business style, which you capitalize your assets and you depreciate them, and you capitalize your debt onto the balance sheet and pay down the debt. So that's the primary difference between the recognition. You'll see in the water fund, your kind of how your funding is going basically with rate increases. You can see from 13 began to rise. These are just some general trends. Your largest expense is your operational expense, and you've started some new projects in the last couple of years to bring that expense up. The water fund net position at the end of the day has continued to rise. Is basically the primary portion of that is in the capital projects. Basically, you guys have been accumulating funds for future capital projects that have not taken place, and so that's the primary increase in your fund or your net position is related to funds restricted for future capital outlay. Now this one looks a little bit odd, and basically the explanation of that is in 2013 you refinanced bonds, and so basically it took a spike because you paid off one bond and restructured it into another, and so that's the primary reason for that spike in the expenses there. So you can see the trend continuing there. So. In the net position, obviously you can see the trend there, also increasing in the capital projects fund for future capital outlay. This is your sanitation fund. Not a whole lot has changed. A continued rise in expense in relation to the amount you're funding. So your excess there is continuing kind of on a normal trend with the increase in net position, once again, going to future capital projects. Kind of on some major financial highlights, we kind of talked about the net position. The net position actually shows an overall decrease this year, but that is primarily due to that restatement that I mentioned earlier. Basically, your net position decreased to restate for the new GASB 68, and that's why the net position is decreased. Actually, the governmental funds had about I believe a $300,000 increase in the operational side of it, and then the $2.8 million is actually the governmental share of that restatement. So that's the primary difference there. Governmental restricted net position. As I mentioned earlier, your total net position of that 3.3 million, that consists of an amount restricted for debt service for $91,000, highway user tax purposes for $234,000 approximately, and then the largest portion, $3 million of it for parks and recreation, which is the Hamilton funds that aren't just unavailable or unassigned to anything. So, yeah, go ahead.
So, you're talking about the $230,000 for highway user tax purposes. Is that the new HB 312 money, or is that shown in this? That's even shown in this audit this year.
So that would be
the new.
That's actually the majority of that is prior. It doesn't have to do with that. That's been accumulated over prior years coming up to this. I'm not sure how much House Bill 312 has it. Okay.
So that is the new 312 money. Okay.
And then there's a list of probably the major capital projects that you've seen during the year and the purchases. I won't go through those in detail since you've probably discussed those at length already. Other financial highlights in your business type activities, the water, sewer, garbage, you'll see the restricted fund balance. That's still primarily consists of capital projects funds, 11 million of the 13 million, and then the 1.6 for debt service, future payments. So you can see the two major water system improvements projects. Those are the primary large activities that occurred during the year. And basically the total government-wide operating expenses, you can see the trend there. You actually were able to decrease your operating expenses slightly this year and come in well below budget, actually.
So even with the ball field project and all those other capital projects, we still come in spending $600,000 less than prior budget year?
Right.
Yeah, a lot of those expenses, like the Joseph Street property or the ball fields, the large expenses haven't come through except for equipment at this point.
And here's kind of a chart that shows basically in kind of a visual what area the expenditures in the general fund are coming from. General government, and then public safety, and then the revenue that supports those. In the general government, that is, here's a list of basically all the functions that fall into general government, basically your legislative, your executive, your administrative, finance, and then any non-departmental transfers, those type of items would fall under the general government. Public safety is obviously your fire, your police, animal control, dispatch, all of those services. You can kind of see a representation here of the trend of engineering, fire control, and purple would be public safety as well. So, and then general government and non-departmental. Obviously, the non-departmental jumped largely this year. Basically, I believe that was primarily due to transfers. The Parks and Rec Fund, Cultures and Recreation, that is another one of your major funds, and these are the areas that fall underneath that. You can see 13 is actually what I mentioned to you in the water, sewer, garbage discussion earlier, happened also in relation to Cultures and Rec. You paid off a large portion of debt and refinanced it into new debt. So that's why the 13 stands out so much there. Obviously, the largest portion, Parks and Rec, and then the Hamilton on top of it as well. Here's the street fund revenue. This shows a good example of basically the street fund operates. It has its user fees and those type of things that help fund this, but it does run at a deficit generally and has to be supported by general fund transfers. As you can see, in order to operate that program, that's a representation of how you fund that. Any questions?
Walter?
Nick, somewhere in here it mentioned that we only got $204,000 in federal grants and that we didn't reach the threshold to require that we work under the Single Audit Act. How much money did that save us?
How much money did that save you as far as audit fees or?
Audit fees.
I'm not the billing manager on it, so generally a single audit does cost probably in the realm of $5,000 to $10,000 a lot of times. Additional funds on top of an audit fee. Don't quote me on that, but or you can quote me on that, but it might not hold up.
Well, that sounds like a good guess, Nick. If nothing
Yeah.
else.
Can you let me know later, Gary? The previous years, I'm surprised that the city of Moscow didn't attain the threshold. It's very surprising. But if we didn't, we didn't, and so the auditing would be less because of it, not in terms of tens of thousands of dollars, but some money.
John?
No question, I would like to make a couple comments. Number one, thank you for the clean bill of health that you gave us for the umpteenth year in a row. And then thank you to Gary and Sarah for taking a rather difficult situation when we lost Don Palmer to first of the year, and bringing in some help and coming up with a situation that I think will be very beneficial to all of us. So thank all of you. Appreciate it.
Thank you,
I'd like to
Nick.
thank you for the clean bill of health. That's not our.
Well, here's the deal. You're the auditor. You report it as it is. Good,
Exactly.
bad, or ugly. That's how it works, and that's what we appreciate. So,
Especially when it's good.
yep. So thank you, Nick. Okay. Okay, we'll move on to the next item, which is
Your
the
Honor,
Moss.
if I may, I'm sorry. I failed to put an action item on the report. It is incumbent upon the council to accept the audit.
Okay.
I would move accepting the audit.
Seconded.
Okay, I'll give Dan the motion and Art the second to accept this report. I'll start the roll with John.
Aye.
Aye.
All right.
Aye.
Aye.
And aye.
Consider it accepted. Gary?